You know, young rich niggas.
This is where we look at various markets, starting with the dollar, the commodities, the stock market, and the currencies. All these markets are interconnected, and remember, no market trades in isolation, because even for commodities such as this one, oil, it is priced in dollars. So no market trades in isolation. So for oil, something very unexpected happened on the open last week. So a very huge gap of around 400 pips. These are a very huge gap. And before that, on the monthly time frame, you can see it had tested a previous zone here. So there is a zone here that was rejected. This was a previous resistance. Now it has turned into support. And this gap, currently we are at another very critical level. You know, with what is going on with Russia and Russia demanding for being paid in rubles for its oil and gas, you know, and all these countries now, they are using the yuan and the rubles, and they are dumping the dollar. I think oil is set to rise for the long term. So on the daily time frame, we are at a very critical point, as you can see. This is a rejection zone from almost 1 year and some months ago. From December 2022 up to now, this resistance has been holding. So maybe on the open, we might see another gap confirming that now this is an uptrend. Same case to the UK oil. On the monthly time frame, same thing happened. Again, it tested this zone here. This was a previous resistance, now turned into support. And on the weekly time frame, when the market opened last week, there was a gap of almost 879 to 83. That's almost 400 pips. And again, similar structure on the daily time frame with the Western Texas intermediate. So on this one, break above 89 will confirm the uptrend. Yeah. So last week's webinar, we were anticipating this move for the dollar index. I remember saying that we might see a spike down, you know, to these previous levels, and that came to pass. And we are seeing signs of bullish momentum. You know, if the market was rejected at this point previously, and now we are approaching this point and we are seeing the same similar signs of rejection, you see there is a lot of probability. There is every chance that the market will turn here again, unless we see a breakout to the downside. So as long as the price holds, I think it's a buy for the dollar, because if you can look on the monthly time frame, this price, I remember last week we were analyzing and we were looking at this resistance. Now it's testing. This was an impulse move, and after an impulse move, we have a correction. And again, this correction is coinciding with the previous zone. So we might see the dollar slowly pushing up with very minor pullbacks. And of course, that means that for the currencies, like the euro dollar, this is what we were analyzing last week. We might have topped. Remember, this one was also an impulse move, and this one is a correction. Okay, same case with the dollar index. Same case to all the dollar pairs. This one was an impulse. This one is a correction. You can even see that this is a very clean move down, and this one is somehow choppy. See? Even for the New Zealand dollar, same case. For the Audi, same case. So this analysis on the currencies and the dollar, of course, we have to confirm with the stock market. So for the stock market, on the monthly time frame, see, this one looks like this one is not an impulse move upwards. So most likely it is a correction. And on a closer look, this is S&P 500. It is at a very, very critical point, as you can see. These are previous zones around here. So we might see some time. We might take some time before some consolidation here before the stock market falls. But as long as the dollar index is rising, then this should be confirmed by the falling stocks. Okay. Nas 100, the same case. You have two hanging man patterns here. So for individual stocks like Tesla, you see Tesla is really bearish. For the last 2 weeks, we have had two bearish candles. Yeah, for Apple, the last week we had a doji pattern. This week we have a small bullish candle, but it has not broken the previous highs for the doji. So still, same case for Amazon. Amazon, it's up at a previous zone, rejection zone, and we can see signs of rejection. There is a doji here, and the last week candle did not break the high for the doji. Microsoft, it's bearish. So last week we saw a hanging man with higher volume than the previous bullish candle. So this hanging man shows that there is some selling pressure coming in. But for meta platforms, the candle was bullish. But again, for meta, we have not tagged the previous resistance at 237 and we're at 221. So maybe you might see a spike up here, maybe on a small pullback on the dollar. Netflix, the last 2 weeks, there's two doji candles. These are in indecision, so we have to watch for the next candle. Yeah, for Alphabet, we have a hanging man here, a hanging man with higher volume than the previous very huge bullish candle. So I wanted to look at the crypto, because this will be very interesting here for the cryptos. So for Bitcoin, I am still of the idea that we will fall very hard with Bitcoin. But of course, Bitcoin, we might see some more upside. We might see the price tag this zone at 33 200 to 33 500. So this might be a spike, and a quick rejection. We will see a wick to the upside, and then we will start seeing the market falling. But remember, before selling Bitcoin, we need to see a correction, a consolidation like this one, on the daily time frame or on the 4-hour time frame, or like this one, or like this one. The consolidation on Bitcoin can take a lot of time, which is why we might see these dollar currencies falling. But for Bitcoin, it might take time. Most likely, that will be next week, early next month, when the market, the Fed, meets and maybe decides to cut interest rates or maintain. So we have to see a major impact news involving the dollar before we can sell Bitcoin. But for Ethereum, I think I said that the structure is even more clear than that of Bitcoin, because this one, the previous zone here at 2000, it has not been broken by a high, by a lot of pips, like the case for Bitcoin. You see, for Bitcoin, these are previous resistance here for the similar period with Ethereum. It is almost 700 pips past that point, but for Ethereum, it's around 100 pips or so. So again, if you look at this structure for Ethereum, this one does not look like an impulse move. You see, when you see the market behaving like this most likely is an A, B, and C correction before you can fall hard. So this one is an impulse. It's a very clean move, we can see. But this one is not an impulse. And again, after an impulse, what we expect is a correction, and then another impulse. So we might see another clean move down like this one here. Same case to this one. You see, this one was an impulse. We had an A, B, C, and then another impulse. And another thing to keep in mind is that the longer this market consolidates, in preparation for the next impulse, the more powerful the next impulse will be. So we might see a very, very huge impulse move to the downside, because from June last year, the market has been consolidating. That is almost a year. So if we were to see an impulse, maybe it would last for around 4 months, a very powerful impulse. Same case to Bitcoin. Since June last year, the market has been dragging itself, no clear direction. But again, this is the similar case with this consolidation here. This one took around January 2022 to March 2022, 3 months. And then we saw a very clean move here. So if a correction can take this long, because that is almost 10 months from June last year, then the impulse to come will be very powerful. And that will be a downside, to the downside. Because if everything goes as we're expecting, the dollar starts to rise and the stock market starts to fall, then with a strong dollar, of course, crypto is bearish. So I believe 2023 is a very bearish year for crypto. and most likely the selling price will be set by early next month, because I believe the Fed is meeting on the first week of May on the interest rate decision, and we expect the Fed to maintain the rates, or at least because since last year when the Fed started hiking the rates, they started with 0.75 points almost 4 times consecutively, and then they came to 0.5. Now they are at 0.25. Of course, that's a trend. So maybe very soon we might see that the Fed will maintain the rates, just like other central banks are doing, like the Bank of Canada. The Bank of Canada, for the last 2 meetings, they have maintained their rates at 4.5. The Reserve Bank of Australia, they have maintained their rates at 3.6. So this is a pattern that starts to come up with several banks before all the other central banks follow suit. But for the major impact in the market, of course, the Fed, the US Fed, if they maintain now, they set the tone for the market. So we'll be watching at 33, 200 to 3500 to wait for the selling. Of course, the market might even push to this price, but then, as I've said, we have to see some consolidation, at least on the 4-hour time frame. We see a consolidation that will last for maybe 1 or 2 weeks. Then there is a strong rejection, some shooting stars candles, then we can sell. Okay, like in the case of last year at this price, before the Bitcoin started falling on the 4-hour time frame, from this point here, this is what I'm talking about. See these shooting stars, we can count a lot of them. 1, 2, 3, 4, 5, 6, 7, 8, almost 10. But you can see the rejection here. Of course, this is a similar structure that we'll be looking at before I can sell Bitcoin. Yeah. So I'll be updating the ideas. Subscribe to the channel. We need more subscribers to reach more people out there. Follow me on TradingView on Twitter, my Telegram channel. Yeah.